Hello, my name is Tim Bishop. I'm an actuary based in Toronto and part of RGA's team responsible for implementing both IFRS 17 and US GAAP long duration target improvements. My role is in change management, working with the many groups impacted by our project as we prepare for the upcoming changes. I want to talk to you now about some of the high level program and change management aspects related to implementing IFRS 17 in these current, rather dynamic circumstances. For those implementing IFRS 17, it's been an interesting journey so far. To start with, implementing IFRS 17 is a unique project in and of itself. The internal impact of IFRS 17 is much broader than just finance and valuation. These are big projects, generally having large IT investments and many opportunities to overlap with other company initiatives. The potential for wide-ranging impacts in many areas of the company is real and not always obvious. External impacts are still not clear. Will IFRS 17 impact markets in terms of product structures and pricing? Time will tell. The IFRS target itself has moved significantly once already and is still not fixed. Since its release in 2017, IFRS 17 has been revised, deferred, and certainly discussed widely. Yet, not all is crystal clear on specifics of acceptable practice for implementation or what local regulators and auditors will require. There's also something of a what came first, the chicken or the egg scenario, where the implementation project itself depends on certain key management decisions, but there must be enough of the implementation built to measure the impact of these choices to facilitate decision-making. This forces an iterative test and adapt process until go-live. If that isn't challenging enough, along comes a global pandemic with its impact on workforce, needed shifts in management attention, and some very real financial market uncertainty. As many IFRS 17 implementations need to reboot or even begin digging into the real detailed work, this brief talk will scan higher-level project perspectives and many of the change management considerations unique to implementing IFRS 17. I want to present a list of considerations and let you decide if there's something that needs your attention between now and go live. First, let's go into a bit more detail on the unique aspects of implementing IFRS 17, and then some of the considerations that follow. Now, IFRS 17 projects are big and complicated. This is certainly a statement of the obvious, but what exactly does it mean? As I mentioned earlier, IFRS 17 typically relies on large IT investments. These projects may also be highly reliant on prior systems or infrastructure work, perhaps for something related to Solvency II. There's always the risk that existing IT technology and data architectures do not fit current needs. Similarly, IFRS 17 implementations might be putting in place infrastructure for use by later initiatives. Within your company, how many other significant projects are happening at the same time? Are they related? Will these projects rely on the same resources, such as business as usual financial reporting staff? So as a consideration, there's a strong need for program management across various projects within an organization. Consider if there's enough communication and coordination to manage timelines and manage potential resource conflicts. IFRS 17 projects have far-reaching impacts. A key part of change management is identifying and agreeing upon what changes are coming and who owns what. When the groups impacted are outside the typical implementation team, this requires specific attention. IFRS 17 implementations as a project are proving to be remarkably unique. There are many indirectly impacted stakeholders, such as pricing, ALM, perhaps capital management, even HR. How many groups rely on information or cash flows produced by your valuation or finance departments? Will their processes soon break? As a consideration, to prevent surprises, a broad change impact and stakeholder impact analysis is key. Make sure you consider impacts and change management needs broadly enough throughout your organization. Externally driven impacts will show over time. With so many companies implementing IFRS 17 at the same time, will this cause shifts in the industry? There is still an open question on how much IFRS 17 will be, quote, just an accounting change versus how much it will change market products or how companies manage themselves. Even if you're not implementing IFRS 17 yourself in your company, many of your competitors are, and how might they behave? If your company's products need to react to the market, how much of launching or revising products will depend on the same resources needed for the IFRS 17 implementation or business as usual? What will the timing of this be? As a consideration, think like a risk manager and anticipate future scenarios that could impact your company down the road. You don't have to be part of an implementation team to take this approach. There will be a lot of movements inside and outside of your company. Think through how you will anticipate, identify, and respond to opportunities or threats. There's certainly a moving target aspect to IFRS 17. We have two main themes here. One is shifting timelines and priorities, and the other is shifts in local requirements and interpretations of the standard. Let's consider the impact of effective date deferrals coupled with current pandemic and economic environment. A lot of project scheduling and resource planning was based on initial timelines. Now that go live has shifted at least 2 years, does your project plan still fit? If your company chose to delay some of its implementation timelines, does this prevent conflicts with other large projects or initiatives within your company? What is the exposure for resource strain or key person risk? Regarding shifts in requirements or interpretations of the standard, how do you ensure all impacted stakeholders are clear on the current position in accounting policy or modeling approach and how this might impact them? As a consideration, as timelines and priorities and targets shift, it's easy to develop a misunderstanding of expectations or compression points on the same key resources. Consider explicit milestones to reconfirm project timelines, potential impacts on broad stakeholders, and expectations of others. If you haven't done so already, a quick zero-based IFRS 17 project reboot might be a good idea. I mentioned earlier about the chicken and egg scenario, where the implementation depends on certain management decisions, but the management decisions depend on the implementation for impact measurement. This is complicated further by some of the moving target aspects I mentioned earlier. Implementations are forced to take an iterative approach to decision-making and reacting to shifts in requirements. For stakeholders that are impacted, it's natural to want clarity up front and upfront decisions so that they can manage their impacts. An iterative approach and perceptions of indecision can cause discomfort within other impacted areas of the company. As a consideration, communicate widely to stakeholders on the process used to iteratively converge on decisions. For the stakeholders looking for hard answers, use consistent communication to help them feel like they're part of the process and to promote clarity. Some final thoughts, and considering some best practices of sorts. Consider a networking model to collecting information and getting alternative perspectives. Whether you are on an IFRS 17 implementation team or not, when thinking about impacts on your function, talk widely to others, internally and externally. I may be biased, but I strongly suggest talking to your reinsurance partner. I've seen considerable collaboration and sharing of perspectives in the marketplace, even among competitors. We are all going through this at the same time. Take advantage of this free resource. Next, have a whole company perspective when assessing impacts. Inventories of known changes and potential impacts on others are a good tool to help think through the domino effect and stay ahead of surprises in your company. Also, over-communicate and revisit. The need to over-communicate can't be said enough. Yes, the pun was intended there. But consistent communication can be your best defense against confusion, which may come as an iterative approach to decision-making and the needs to shift within your project. Also, be creative when thinking ahead. There will be opportunities and threats that present themselves. Be ahead of them. Bolster your project plans with contingency plans. And finally, anticipate a flurry of activity and further disruptions prior to going live. Obviously, the pandemic is still a wild card, and projects always get busy before go live. However, there could easily be new factors as well. Might there be some purchase or sale opportunities for blocks of business? You could speculate better than I on what impacts come for your company. Given that this is a once-in-a-career change in financial reporting rules, it is likely to create some significant reactions in many companies and in marketplaces. A risk we must manage is that too many things need to happen at the same time. In closing, I hope this list of considerations has piqued a few thoughts and added some value. So many of us are all going through this at the same time. Let's share perspectives and insights along the journey. Please reach out to us if you would like to discuss the impacts of IFRS 17 in greater detail. Thank you.